The question is that stocks, especially in the US, among the, say, magnificent seven semiconductors and so forth, these stocks, they have a relatively high valuation or extremely high valuation. So even with money printing, stocks may not go up a lot. And as we've seen today, as an example, the CPI came out and it was perceived to be better than expected. Now, the CPI, the way the Bureau of Labor Statistics calculate the CPI is very questionable. So whether the inflation that they publish is reflecting the economic reality on the ground or not is a different question. In general, my sense is that prices are going up much more than what the Bureau of Labor Statistics seems to suggest. But anyway, the market is the market, and the investment community likes to believe what is good. So bonds rallied. But at the same time, the dollar went down. You understand? If a country like the US decides to print money, they can print money like in Turkey and in Argentina and so forth. Over time, the currency will then depreciate. The question is by how much? And my view would be that if the US embarks on quantitative easing, if they cut interest rates, in my view, the dollar will begin to weaken considerably. Now, the question will then arise, well, weaken against what? Because the other currencies are not much better. But my view is that it will weaken against Bitcoins. Not that I'm bullish about Bitcoins, but the market will perceive a weakening dollar as being positive for Bitcoins, and it will weaken against precious metals, gold, silver, platinum, which I suggest people hold to a certain extent, not all the money they have in gold, silver, and platinum, but a large percentage, say 20, 30%.